ahead and segue over to uranium. You brought up COP28. Uranium, nuclear power are, big topics on the agenda, or were at COP28. Uranium's at what, $81 now? It's been trending higher and higher for the last, I want to say, since March. It's been consistently moving up. What's your take on uranium?
Well, I mean, I don't really talk about it that much. I mean, just because of the fact that I think that the supply, you know, the news of COP28, where you had 22 of these larger countries say they're going to triple their nuclear capacity by 2050. I think that's just gasoline on an already burning hot fire, right? I mean, we didn't need that news to be even more positive, but it is. And again, I mean, it's basically the situation is very simple in uranium. I mean, it's a classic example of underinvestment and not enough material. It's a supply-demand imbalance, and it's just going to get worse. And for the last year and a half, 2 years, all we've had is good news about demand around the world. And but I didn't hear any announcements about anybody tripling the amount of uranium that's going to be extracted. So I think what we're going to find is that this bull market in uranium is intact. Again, there will be ups and downs. Prior to this move you just described, there had been a period of about a year or so where the price of uranium stocks have been coming down. People lost interest, and that was after another big move before that. So this is exactly what happens. And but if you're positioned early, then you don't really care. But if you bought it at the top a year and a half ago, that intermediate top, well, of course, then the prices were down. But I think it's kind of like what I've said before, kind of like understanding what's happening. And I feel vindicated because I've been a big advocate for nuclear power. I remember when I first started making YouTube videos, maybe 4 or 5 years ago, I said nuclear power will come back. It is the solution for all of this. I work in renewables, so I know the physics and math behind it. It ain't gonna solve the problems. Everybody's realizing that now. And so everybody's going, gee, if we really want to address if climate change is your thing, then you have to be pro-nuclear. If you're not, you're just not a serious person. So you see these countries, the zeitgeist has changed. And I will be the cherry on top. Well, I will declare victory is when the German government reverses its policy and turns its reactors back on. And I say that will eventually happen too, because you're not going to power unless you want to just be poor. If you want to be poor and regress economically, then try to run your economy off of intermittent power sources. And I think the population will just revolt. People now are starting to understand these things now, and it's the zeitgeist is changing. Things are changing politically, and then that was a perfect example right there, where you have all these countries agreeing to. Because remember, after Fukushima, everybody, nuclear's dead.
Yeah,
I was saying no, it's still a growth industry. Look to the global east. Look to China, India. These places, they don't have any other way to do this. And even when Japan reversed their shutdowns and started bringing reactors, people still didn't believe it. But I think it goes without saying now. I mean, nuclear power is the future. It's the cleanest, best, cheapest energy source out there. And I think this recent announcement is just further vindication and more, like I said, more wind in the sails of an ongoing bull market in uranium. Now, that doesn't mean it's going to happen in the next, going to have a blow off, but I think we will get a musical chairs. Remember the game when you were a kid in kindergarten?
Yeah.
4 chairs, 5 kids walking around. They shut the music off. That's what's going to happen. I think there's just not enough mine supply for everybody. And I thought it was interesting just with some of the interviews I heard for people that went to the most recent fuel conference back in London several months ago, that they were investor types like Harris Kupperman, for example. He said it in a video. Somebody interviewed him. He's like, he was shocked that the fuel buyers still don't get it. They're just like, it'll always be there. We just have to pay up for it. It's not a problem. Well, we'll see. But like I said, the demand picture just keeps improving, and we just don't see any supply response yet. So eventually we will. Markets work, and the price will go high enough. But that's way down the road. So I
Yeah,
think
and we
you
still
just
haven't
hold.
reached any big media attention phase or anything
Yeah,
like that.
exactly.
We've gone from what, like 40, what is it, $50 to $80 within the span of several months. And, it's still a pretty, still a pretty quiet place to be around. We're not that big of a community as us uranium traders yet. We're nowhere near crypto, or any of that stuff. So it's a pretty good omen. The fact that we're 50% off the highs and not a peep yet from anyone outside of our own bubble. You mentioned Germany and their shutdown of their nuclear reactors. I've heard speculation that one of the reasons that for their actions could be they might view nuclear sites as a military target, because from like Russia or other players geopolitically. So I thought that was interesting thing to consider as well. It's like, are these guys really that stupid, or is there something greater at
No,
play?
it's even easier to explain. It's a coalition government. Okay, the Greens have control of the economics ministry with Habeck and these people, and that's like trying to get a Baptist to convert to Catholicism. They're not going to do it. I mean, all through the 70s, the Green Party's main focus, you can go and look the images up. They used to have a picture of an atom with a smiley face, and it would say "Atom Croft nine donkey." Nuclear power, no thank you. That was the whole basis of the Green Party in Germany through the 70s and early 80s. That's their whole theology. So when they finally have gotten into power in this coalition government, they're not going to turn those reactors. They're burning coal.
Yeah.
They're removing parts of wind farms to get to the lignite to keep the coal plants running. They will simply not. It's just an inborn philosophical thing that they're not going to do, and they won't be in power. Is what will happen. I've already made the prediction. I mean, people are just not going to. The Christian Democrats and the AFD are going to eventually take power, and they're going to turn the reactors back on. It's just that simple. They don't have a choice. They don't have any other. What are they going to do? Either that. I'll even make a further prediction. Over the course of the next 5 to 10 years, the Nord Stream gas pipelines will be put back in service. They have no choice.
Yeah.
And we're paying $2.75 an MCF in the US, and they're paying $15 or $20 right now in Europe. I know people in the German chemical industry. They're going to shut down the entire industry and move it overseas. Eventually, the majority of people in the world or in these democracies, they vote with their wallet. If they see their standard of living going down, that this will motivate the majority of people. Otherwise, they'll just get more poor. That's all. That may be something that people do. I'm very concerned. We're kind of straying off here. I'm very concerned about Europe. They seem to be in this self-immolation stage. I don't know if all the good genetics got killed off during World War II or what happened there, but there's a very weak group of people. Not everybody there, but that doesn't seem to just is importing a bunch of military-aged men into their countries that lay around and complain and commit crimes and crap on the ground, and they don't seem to want to do anything about anything except for sit there. So maybe that's what will happen. But I suggest that things are going to change in Europe. The pendulum will swing back the other way. You've just seen the recent elections.
Yeah, it seems like it is.
Recent elections. Yeah.
Yeah.
So
Look at the Netherlands.
it just takes time, and people get fed up. So,
and it's and it seems like it's a global thing as well, because you have the same thing in Argentina a couple weeks ago with Milei. So
yeah,
kind of see the pendulum kind of swing back the other way.
I don't want to get too much onto this because people don't like talking about this stuff, but I think you have to take it into your consideration because these are things that affect economics and affect investing. So
this stuff doesn't act in a vacuum.
Yeah, exactly.
And all these markets, I mean, like it or not, I mean, they're heavily politicized now.
Especially energy. Yeah. So exactly.
All right. I want to take it back to best investment practices. From your kind of the diagnosis, what's your What asset do you see as the biggest contrarian play at the moment?
Biggest contrarian play right now, in my mind, there's no real like knock your socks off stuff like
Mhm.
oil at negative 47 or uranium 5 years ago, but I do think there's some opportunities. I'm especially bullish over the next 5 to 10 years on emerging markets. Um, these things seem to form 180 degrees out of phase from like developed markets. And so we have this extreme overvaluation in the US and we've have extreme undervaluation in emerging markets. And I think that there's opportunity there. I've been talking about like Brazil, for example. Few companies there that I've gotten involved with have done well, and some other places. So I think that that's an opportunity. Select markets and emerging markets, I think, are going to do well, especially if you think that we're going to have, like I said, more liquidity. It just seems to be, if you look at a long-term chart of like the emerging market MSCI emerging market index against like the US indexes and stuff, talking about like the S&P, they're completely out of phase. When one's up, the other one's down, and vice versa. And it seems to go in like these long, decade-long um, uh, time frames of over and underperformance. So I'm kind of bullish on that. I think in the short term, I've been buying TLT. I mean, you've had treasuries down 3 years in a row. Bob Farrell says that when the market goes too far in one direction, it usually has a tendency to revert back the other way. That for the wags in the comments, I'm going to cut them off at the ankles right now. I'm not advocating that you buy long-term treasuries and hold them till they mature. What I'm saying is that by this time next year, I think the inflation rate is going to be well under 2%. We will have had some type of financial accident, and the Fed will have already cut rates by 200 or 300 basis points. You're looking at, if in that type of scenario, which is my base case, you're looking at a 25 to 30% total return on TLT. And I don't think there's anything else that's knocking my socks off right now. I don't see any impetus in the U.S. or in the, until we see, we get into the next liquidity cycle over the next 2 years. Where's the growth going to come from? And so I'm content to. I was holding Treasury bills, which are short-term treasuries, but now I've moved out on the duration curve 2 years, and now I've been scaling into some TLT over the last month. But that's like a 6-month trade, maybe, or maybe a year-long trade. And like I said, I'm also moving into some gold stocks. Now I have my core positions that I think will still do well around uranium. I think the uranium price will go up, but if we get into a situation where there's no reason why the overall general stock market can't be down 30%, 40% next year. And so I think there's going to be some other opportunities in the short term, but longer term, I like emerging markets, and we just have to see what comes along, whatever gets pasted real hard and shows up as a contrary type situation. I don't see any fat pitches right now.
Yeah.
There's possibility for, like I said, some little trades here and there, but I wouldn't go too crazy right now.
So you're seeing economic downturn in the form of a recession sometime next year, which would result in rate cuts of 200 to 300%, 200 to 300 basis points. So what if it's a stagflationary scenario? So when you have a recession and then inflation from the supply side, would the Fed still be kind of pushed to cutting rates at that point, even if the inflation rate kicks back up while you have a recessionary outcome?
So everybody keeps talking about stagflation, and all I see is CPI coming down. Majority driver of CPI is rents. It lags. Rents are coming down. CPI is coming down. CPI would be 1%, under 2%, 1% this time. We're going to have a hard landing next year. We're going to have we're going to have something comparable to the great financial crisis. Nobody's talking about what's going to happen. The banking crisis isn't over. What's going to happen with commercial real estate? That has not been resolved yet. Nobody's talking about all of these zombie companies that have to refinance. So you could have an accident in high yield.
And all these things cascade on top of each other.
That's exactly right. Yeah. So you get a sentiment change, and then you have this big sell-off. So believe me, the Federal Reserve wants to cut rates. The Federal Reserve wants to print money. That's what they do. Okay. And so until they see inflation down around 2%, okay, which is their goal, I believe Mr. Powell's going to do that, or he gets air cover where the markets and the press and politicians can come and beg for him to. That's in the context of some explosion somewhere and some landmine going off in the banking sector or who knows what. I just don't see where these, I'd listen to some folks that say, well, stagflation, inflation. Look, we had inflation because they raised the money supply and injected all this money into the economy. They're not doing that anymore. M2 is negative. Okay. M2 money supply growth is negative. Banks are tightening credit. So where's the credit creation coming to? The supply chain things have a long time ago are mostly resolved. Okay. There's things here. It's not hard to go buy a car. You can buy any car you want. You can get a refrigerator. That's over with. So I think what you're going to see is the last thing to really hold things together was employment, and that's typically a late cycle situation. And we're already seeing what I don't like getting into is it's you had an economy. My thesis has always been this: for the last 10 years, you've had an economy that's existed on 0% interest rates. You raise rates within a year to 5%. This U.S. economy cannot function with that kind of, and those rates haven't fully went through the economy. Those previous rate increases, the lag effect, if you will, they haven't made all their way through that. So we don't know. We're walking through a minefield, and we don't know what's going to go off next. Are you going to have problems in the banking sector, commercial real estate, regular housing? Prices now are starting to deteriorate around the country. So who's going to sell their house? And the average mortgage payment's more than doubled. I mean, so we have a lot of issues in this country, and I just don't see this impetus for. I see an impetus for recession, and I see disinflation going forward, not inflation. I think a lot of people are getting that wrong. I do think if you look at the 70s, I think that's the example. Lynn Alden has talked about that, and other people. You're going to get it's the analogy I've used for 5 years. This is a group of people that are so smart that they're dumb. Okay. Have you ever driven on an icy road before with bald tires? When you start to slide, you just take your foot off the accelerator. If you glide into a snowbank, fine. What people do is they maintain their speed or panic and push the accelerator, and they start oversteering.
Yeah.
And that's what these people do. So they cut rates. They flooded the economy with all this money, and of course they had inflation. What did we think? We told the world to stop producing for a year, and then we shoved all this money in. So of course we had inflation. And so what did they do? They panicked. All the central banks reversed. They raised rates, QT, the whole shebang, and now this is like I don't know what the impetus is. This is just careening back and forth with ever larger gyrations, whether inflationary or disinflationary. So the central bank was created to prevent deflation. They know how to do that. We won't ever have deflation. We'll have periods of disinflation where the rate of increase in inflation goes down. That's what people don't understand. The prices that are up 20% or whatever people experience, you'll see some little price cuts here and there, but the overall price level is now entrenched higher. That's why you have all those wages going up. People say, well, what about, all these wages, these agreements? Well, what if I lay everybody off? So what if I signed a contract with my labor force to raise wages by 40%, but I lay them off because we're in a recession? So that, to get into, and so what I think will happen is the economy will deteriorate, and then they'll go back to what this is what people say. They'll say, well, the economy, John, it could collapse. The economy's not going to collapse. What do they do every single time that they have economic weakness? What's the playbook? Or if there's a crisis in the banking system, what is the Federal Reserve's playbook?
Print more money.
Print more money. That's it. In ever increasing amounts. That's why over time you're going to see the balance sheet get bigger. He has room now. He's got 5% to play with. That's great. If you listen to a guy like David Rosenberg, who's been an economist for 45 years, he'll tell you that the average rate cutting cycle is 5 percentage points.
Yeah. I mean, I remember back in 08 with the bailouts back then. What is it, a few $100 billion? That was a big deal. $100 billion. That was a big deal back then. Now we're dealing in trillions. So the bar keeps getting higher and higher.
So I think that, being prudent, and I think when we see that next liquidity cycle, let's just call it that, it's already starting with some of the other central banks at the margin, like I said, since the summer, when the big boys like the US and the EU are forced to start cutting and returning back to printing more money. I mean, this is when a lot of these commodities are going to go nuts. And I think, like, taking this all the way back to the start of this conversation, markets again look forward. And so there's these things like gold and Bitcoin are sniffing out what's getting ready to happen, in my view, because they're liquidity driven assets, and people are going, smart money is starting to move in and say, okay, it's obvious what's going to happen over the next year. I mean, what's the EU going to do? The EU is in recession, okay? And so once they get there, either one or two things are going to happen later on in the spring or early summer when they they'll declare victory on inflation, or something will happen that will force them to, go back to their swinging their only tool, which is that big hammer of rates and quantitative easing. And it'll just be more and more and more. And then, you could see a reacceleration of inflation then. It just depends, how much money they print and, and where it ends up going.
What about people who say that wars are always inflationary, and we're in a very wartime setting at the moment, where like anything could just kind of pop off, whether it be in the the South China theater, Middle East, Europe, etc.
We are in World War III. We're just not. People have a context of thinking of it as a World War I or World War II. We are in World War III right now, between the Atlanticist, U.S. Atlanticist hegemon and the rest of the world that doesn't want to be under that yoke anymore. So that's what a lot of these conflicts are about. I will tell you that yes, overall, the impetus, I would say, for inflation is higher during wartime, but it's going to be overcome by these short-term disinflation. And when I say short-term, year, 18-month disinflationary periods, if you have 8% unemployment in the U.S., I don't care unless you have like a full mobilization where we're going to invade Iran with 2 million men like Normandy. Well, that's a different situation, but we're going to be in a situation where we're going to have unemployment at 5, 6, 7% this time next year. And the disinflationary impact of that is going to overwhelm a lot of these other things.
Yeah, that's actually a good point. You're actually incentivized to keep as many men as possible within your borders to actually keep production at bay. Otherwise, you send too many men to the meat grinder, then your GDP falls down at a time when you really, at a time when you're in a deep recession like that. You need all the productivity that you can get.
Well, I mean, think about it this way. When I say World War III, they're not going to be between like China and the U.S. or China or Russia and the U.S. It's going to be via proxy, because the nuclear powers are not going to engage in open conflict as it results in escalation to a nuclear war. But you are going to, in my view, going to see more and more of these proxy. Well, it's been going on. It's been going on since nobody was paying attention to Syria. Nobody pays attention to Armenia, Azerbaijan. These are all, look at who's lined up on each side. You see the constant proxy type situation. Look at the current war. And I mean, I'm not going to get involved with I just think that you're going to have more conflict going forward, because you have a system in the West that's falling apart now, and for various reasons. And like I said, 20 years ago, you could boss India around. 20 years ago, you could boss some of these countries around. You can't do that anymore. They're just too large. Their economies are too important. They just are they're like becoming from childhood to precocious teenagers into early adulthood. It's like, I don't have to listen to my parents anymore. I don't have to listen to what's the United States going to do if I what did the United States do to India when it was buying discounted oil from Russia? There's nothing they can do. And so Ethiopia watches that. The Saudis watch it. Venezuela now is talking about invading Guyana. Do you think Let's just be honest. If Donald Trump was the president, and I'm no fan of any of these politicians, that Venezuela would have had a referendum on Sunday about invading Guyana, and there's no way it would even be discussed. But when you have weak leadership, that's what you see in the West. You have weak leadership. It's running off a playbook that doesn't work anymore. It doesn't get what's happening around the world. You have to engage some of these countries as equals. You can't dictate to the rest of the world anymore. And I think people are forgetting about that. That's why you're in World War III right now. So let's pose a hypothetical. What are the political, economic, and social fallout of Russia winning the war in Ukraine? I'm not saying they're going to or they're not going to. What happens? What's the point of NATO and the EU if they can't back up anything that they can say?
That was a raison d'etre to begin with. NATO was there to keep the USSR in bay.
So if you're there, you know, what are you thinking? If you're a German politician in the AfD or CDU or average person in Eastern Germany, you think to yourself, wait a minute, we just destroyed our economy and we have all these high energy prices and all this stuff. For what do we do this for? That's the question people start asking themselves. And so, you know, there's a lot of these things. I think there's going to be one of the things I try to tell my subscribers is there's going to be I can't even conceive of the political, economic, and social changes that are going to happen over the next 10 to 20 years in this world. If you're running off the post-World War II international rules-based order dictated by the U.S. and its allies, that playbook's broken. And so what comes from that, I don't know. I don't know if it'll be better or worse, but I do see the emergence of the global South and East, and it has to be taken into consideration. And I think that presents opportunities.
Yeah.
So
yeah.
Anyway,
I mean,
kind of got off track a little bit, but that's kind of how I look at these things.
No. I mean, that's what we said a little while ago. I mean, all of these markets are politicized to begin with. So, you know, if you want to have an honest, intellectually honest conversation about markets, you also have to dabble in the geopolitics as well. So, I mean, because capital flows, I mean, because geopolitics signals capital flow.
I mean, I'll point out a perfect example, a question I would ask your viewers. And, you know, I'll pose this question, we can discuss. The United States gets what percentage of its electrical generation from nuclear?
Was it 10% or 20? I think it's 20. Yeah,
20%. How much uranium did we mine? Yeah, how much uranium did we mine in this country last year? We're completely dependent on foreign sources of uranium. Not only that, but enrichment. So the Russians over the last 25 years have basically controlled 50% of the enrichment market around the world. Does that seem prudent to you?
Yeah,
the political class allowed that. Yeah, exactly.
Yeah, we in the U.S. we bought I think $1 billion of enriched uranium from Russia in 2022 in the heat of the Ukraine war.
Exactly, and not only that, all of your capital ships, your fast attack submarines, nuclear deterrent submarines, and carriers all run on nuclear power. Yet we don't produce any nuclear power, any uranium in this country, or maybe 100,000 pounds, some small amount. That's insanity. That's not an indication of a political class that's got their shit together. Okay, we coaxed this country of Ukraine to have a proxy war with Russia. Yet we can't. Now we spend $893 billion and can't produce enough shells. The Russians are out producing us. Not only that, we're complaining about, well, they're buying shells from North Korea. They're not buying it from North Korea. They're just stamped made in North Korea. They're made in China. You're fighting the industrial behemoth of China now. Where do you think Russia's getting all the drone parts? They're getting new rocket systems, MLRS ammunition. That's all coming from China through proxies. And we sit here and complain. And what do? We spend $893 billion a year, and they're out producing us 10-1 in shells in 155 millimeter. Basically, this is an artillery war. It's an attrition. I just use it as an example. This country doesn't have its shit together. We're running on fumes and smelling our own farts from the 30s, 40s, and 50s. That's just a fact. the CHIPS Act. Why are we spending hundreds of billions of dollars to bring microchip production back to the US? Do we have any comparative advantage to do that? Are we actually going to have a chip building industry here in the US? No, it's just another boondoggle. Okay. They can't even start the new manufacturing facility in Arizona because we don't have enough technical capacity here in the United States. We had to bring people from Taiwan to help commission the plant. I mean, I can go on for hours. Okay. What inner city do you want to live in?
None.
And what major? Exactly. You want me to keep going? I can go on forever. So, we're a country that likes to smell our own farts, and the reality is not what it was before. And so, I still think there's opportunity here. I still think it's one of the best places to put capital in the world, but that's being eroded over time. And I think most people will not agree with what I just said. I don't really care. I'm beating the S&P the last 5 years, so I'll just keep doing what I'm doing.
Yeah, right on. I think we brought this point up last time during our last episode, but I really do think these elites, that run the country and the West in general, they've just grown up with a 0%, very low interest rate mindset. So in that kind of environment, you can make there really isn't any consequence to your action. And that's the mindset that they've adopted and they've applied everything everywhere else. And now it's coming back to bite them in the what.
Yeah, I didn't mean to be so crass on your as an invited guest, but it aggravates me, So I think that, like I said, this is a major. These things need to be taken into consideration. You're not going to hear this from your Edward Jones advisor, who's going to be pushing still pushing a 60-40 portfolio on people. I mean, I guess my whole thing is you have to get rid of the home country bias that many investors have. And not only that, you're going to have to be successful in investing and speculating. You're going to have to be an active participant. And that means you're really going to have to be tuned in and really be paying attention to what's really going on. What's reality, not what I want things to be, but what are they, even if they're distasteful for me. Believe me, there's a lot of things that I find distasteful, but they just are what they are. And you have to, you're in this to make money. You can't really, there were so many people, I'll give you an example. There's so many people that I remember after President Obama was elected, the S&P kind of bottomed around 666. I don't know if you remember that. It was during the great financial crisis. Mm-hmm. He came in during that period of time. So I told people, if you look at, Federal Reserve was cutting rates and all this stuff. So it's like, liquidity drives markets. So people should have been buying the S&P, but people were like telling me, friends of mine were saying, well, I'm not going to, buy stocks because I don't like Mr. Obama's policies. Well, it has nothing to do with it because liquidity is what drives the market in the short term, not Mr. Obama's policies. So that's an example of not letting the biases get in your way. You know what I mean?
And with Lula, I mean, I've heard plenty of people talk about, Brazil's uninvestable now because Lula's a socialist. Well, I mean, you look at the last time Brazil had a big bull market, who was in charge? It was Lula.
Exactly. I mean, it was interesting because people talk about, like, I didn't realize this, but I happened to be on a conference call with some folks with a guy that lives in Venezuela that is a hedge fund guy. I didn't know that capital markets were open there, investability. I mean, and this guy set up a real estate fund. I mean, he's a U.S. citizen and a Venezuelan citizen, but the perception sometimes is very different than what the reality is. Let's put it that way. For especially if you're in the U.S., because you have so much of a biased media that the media narrative really distorts things because it's there to be a fifth column for the power structure. It's not there. There's no investigative journalism. There's no incentive to tell people what's really happening, and so everything's biased, and so that makes it more difficult to get information or to figure out what's really going on. I mean, what's the financial meet? What if you go ask a real estate agent, should I buy a house? What will they say? Yes, you should buy a house. Yeah, right now, because they're incentivized to tell you that. So if you're going to listen to the media in the United States, they run on advertising. And so they're going to be biased towards, it's always a good time to buy stocks on CNBC, right? So
yeah, I mean, as the late great Charlie Munger would say, show me the incentive and I'll show you the outcome.
or as Buffett said, don't ask a barber if you need a haircut.
Yeah, that one too.
So I mean, we laugh about this, but it's true. So I think, incorporating and trying to be, and no one's going to get it perfect, including myself. Believe me, I'm the worst. But trying to understand that you are going to have biases. Every person's going to have biases. Everybody's going to be influenced by different things that their life experiences. But again, this is about making money. So trying to distill down what is actual reality, regardless of how you're biased or what you personally feel about that reality, is I think very important to be successful.
100%, 100%. Objectivity is key. Well, John, I know we went a little over time, but I really appreciate you hopping on here for a second time. Really enjoyed it. Tell my audience where they can find you.
Just go to Twitter or YouTube and put my name in there, and you'll see that'll take you to everything that I do. I have the YouTube videos every week and play around on Twitter. So if people are interested in listening to my rantings, then they can go there and start there.
Excellent. Well, we'll also have your links in the description box below. And, thank you for watching, guys. If you enjoyed this content, be sure to hit the subscribe button, hit the like button, comment down below, bell notification icon, do all the YouTube stuff I'm supposed to tell you to do. And with that said, I will see you in the next episode. Bye, y'all.